Hello everyone, welcome back to another video. In today's video, we will discuss one of the most effective and popular trading strategies, the pullback trading strategy. So without further ado, let's get started with today's video. So what exactly is a pullback? In simple terms, a pullback is a temporary reversal of the main trend of a currency pair. It's like the market taking a breather before continuing in the same direction. As a trader, you can capitalize on these pullbacks by executing trades at favorable levels. Look at this chart. It shows a bullish trend with multiple pullbacks. Notice how the market retraces from the highs, makes a temporary dip, and then resumes its upward trajectory. This is where you can seize the opportunity to enter a long trade. Reasons for pullback. First, profit taking. Profit taking is a common reason for a pullback. When an asset's price has increased significantly over a short period, some traders may sell their positions to take profits. This selling pressure can cause the price to temporarily reverse or pull back. Second, market corrections. Sometimes the market may correct after an overbought or oversold condition. Third, technical factors. Technical factors such as support and resistance levels, trend lines, or moving averages can also trigger a pullback. But the problem is, how do we know that the pullback will end here instead of continuing downward? Here are 4 points to identify a valid pullback. First, support or resistance. The pullback should ideally retrace to a key support or resistance level, which can act as a potential entry point for traders. This level should be identified based on technical analysis, such as trend lines, moving averages, or Fibonacci retracement levels. Here on this chart, you can see on the left that the price has rejected this level several times, making it an area of resistance. Next, the price breaks the resistance and moves up, and then moves back down, forming a minor pullback. Note where the pullback ended. The previous resistance is now acting as support, and we then see the price move higher. The next level is the trend line, where the market could possibly pull back. Here on this chart, we can see a clear downtrend, and we can draw a trend line above it here as the price has rejected it several times. Now that the price has made a pullback towards the trend line, we want to make sure that the price will in fact reject this level and continue falling. To do this, we draw another minor trend line on the pullback, and once the price breaks out of the minor trend line, you can enter your sell positions. The moving average is another level where the market could possibly pull back. Moving averages are without a doubt one of the most often used tools in technical analysis, and they may be employed in a variety of ways. You can also use them to trade pullbacks. A 20, 50, or even a 100 period moving average might be used. It actually doesn't matter, and it all depends on whether you're a short-term or long-term trader. Here in this chart, I used a 50 period moving average, and the price showed 2 pullbacks during the downtrend. So these were some examples of the price pulling back towards a key level. The next point to identify a valid pullback is the time frame. The time frame of the pullback should be shorter than the time frame of the trend. For example, if the trend is a long-term uptrend, the pullback should occur over a shorter time frame, such as a few days or weeks. Third point, volume. The volume during the pullback should be lower than the volume during the trend. This indicates that the market is taking a break and consolidating before continuing in the direction of the trend. Next, the price action should confirm the pullback. A valid pullback should be confirmed by the price action in the market. Traders should look for a bullish or bearish candlestick pattern, a reversal signal from a momentum oscillator, or a bounce from a key support or resistance level as a confirmation signal before entering the market. This will help ensure that the pullback is not a false signal and that the trend is likely to continue in the intended direction. Now let's take a look at a few examples to understand how the strategy works in practice. As you can see here in this chart, the price is in an uptrend as it is making higher lows and higher highs. Next, I have applied a 100 period simple moving average as our key level on the chart. And here the price pull back towards the moving average. And if you see on the left side, the price has rejected this level several times, making it an area of resistance. And now the moving average and the resistance line both intersected here, which makes it an area of high confluence. The next step is to watch the price action to see if the price shows some type of rejection here. And as you can see, a bullish engulfing candlestick pattern was formed here, which shows strong buying pressure in this area. So this is a good opportunity to take a long position here. Now let's see a short example. Here in this chart, the price is in a downtrend, as it is making lower highs and lower lows. Next, I have applied a 100 period simple moving average as our key level on the chart. And here the price pull back towards the moving average. And if you see on the left, the price has rejected this level several times, making it an area of resistance. And now the moving average and the resistance line both intersected here, which makes it an area of high confluence. The next step is to watch the price action to see if the price shows some type of rejection here. And as you can see, a bearish engulfing candlestick pattern was formed here, which shows strong selling pressure in this area. You can enter a short trade at the opening of the next candle. Let's see some more examples. Here, the price is in a downtrend, and here we can draw a trend line as our key level. Now that the price has made a pullback towards the trend line, we want to confirm that the price will indeed reject this level and continue downwards. For that, we will draw another minor trend line on the pullback, and when the price breaks out of this minor trend line, you can enter a short position there. But entering the market on a pullback is just the first step. You will also need to carefully consider how to limit your risk and secure your profits. To do this, you need stop losses and profit-taking tactics to manage your trading position. Here you can set your stop loss just above the recent swing high, and you can set your profit target at potential support areas. These are zones where the market might reverse upwards against you. Let's see another example. Here the price is in an uptrend, and here we can draw a trend line as our key level. And recently the price experienced a support level here, which makes it an area of high confluence. Now that the price has made a pullback towards the trend line, we draw a minor trend line above it. And when the price breaks out of this minor trend line, you can enter a long position. Set your stop loss just below the recent swing low, and profit target at potential resistance areas. Again, nothing in this video should be taken as financial advice. This is purely for informational purposes. So thank you guys for watching, and if you like the video then be sure to subscribe to our channel so that you don't miss on any of our new videos. I'll see you in the next video.